What is up, everybody? Happy Wednesday. You know what that means. It's hump day. Stocks are mixed today. Market's pretty flat for how volatile we've been. Usually, the past couple weeks, it's felt like every single day is either a big up day or a big red day, or it's a day that starts up and then ends up going down, or it starts down and comes back up. Today, we've been pretty much, kind of just about bar coding, not really a big range today. You can see here on the cues. When we opened up here at around 9:30, dipped lower to about 262, reached highs of 265 at 263 right now. So nothing really going on much in the markets in terms of big movements. I think a lot of people are kind of anxiously waiting the CPI report tomorrow. Of course, today we did get the PPI report, and we'll talk about what that means, how it's different from the CPI, and what the takeaways are from that number, which did come in a little bit higher than expected. Yeah, not a bad idea to just set it out at 11:35. It's my bad. A couple minutes late. S&P 500. Mitch asked, will the S&P 500 break 359 before it did? Indeed. We broke right below that 359 level, reached down to around 358 flat before bouncing up a little bit. Again, making new, I believe these are new. Let's see. No, yesterday we intraday lows right here. Yesterday we hit our new kind of 2-year lows. So off those lows for now. We'll see if we take out that 356 level, 355.75 if you want to be more precise. Was the exact low we got to yesterday. Was again a 2-year low on the S&P 500. So for people out there that follow charts, they see making new lows as a pretty bearish sign. So we will watch that key level from yesterday again around 350. What did I say it was? 355.75. What about 3? I don't know what about 3 means. Nat Gas just took a dip. Let's go to the UNG, the United States Natty Gas Fund. Go to the 10-minute chart here. Ooh. Yeah, you're right. Kind of decent size little red candle there. Almost a full percent on UNG in 10 minutes there. Yeah, and we talked about this KOLD, Boyle, your inverse and bearish, leveraged, or sorry, your bearish and then leveraged, bullish ETF for Natty Gas. Always a decent trade idea to be had here. You just got to kind of be you got to have conviction when it comes to picking the direction here. Usually you got to have some sort of an idea of what these catalysts going on in the natty gas market are. And of course, right now, between the war in Russia and Ukraine, inflation rising across the world for different energy, I mean, there's more and more volatile and crazy movements in the natty gas markets right now than ever before. So certainly, watching KOLD, watching Boyle, figuring out, what these things are doing and how you might trade them can be very lucrative. Again, you have to, if you are going to trade these leveraged ETFs, you have to be very, very careful and watch the positions closely, because unlike regular ETFs or unlike regular stocks, these things, by their nature are kind of designed to go to zero over time. They're not meant to be just buy and hold assets. They're meant to be assets to be traded quick in and out. But again, we're talking about BOIL, Boyle, and then KOLD, cold. Those are your inverse. And then bullish natty gas funds from ProShares. I do like trading those a little bit. Like once you start seeing Boyle get really overextended, natty gas is due for a pullback. Kind of the opposite right here. I'd almost be more interested in buying Boyle. You look, we hit this bottom back in July, and you had to go all the way back to March to the last time we got down there. Energy supplies are still going to remain constrained, which means people are willing to pay a premium for natty gas right now. And I think long term, natty gas has a very important spot as kind of helping us be a stepping stone from where we are now to more clean energy, kind of help. Are they domestic? I don't know. I mean, I think they just kind of track the natty gas markets. So when natty gas is up, oil's up and cold is down. Because I mean, right now, right, like there's demand for clean energy. We don't have enough supply to meet all of our energy demands through renewables. So as we try to get more and more off of fossil fuels, natty gas is going to be that stepping stone. And I like it for that reason. I think, you know, in the next 5, 10, 20 years, we're going to see natty gas be a very important role in our energy production and consumption. All right, guys, I just got word from our producers that we forgot to run the intro today, so we're going to go ahead and play that video. Be right back while we're playing the intro. Little homework assignment. Throw something in the chat for what you want to talk about. We'll take some topics from the chat for the next 20 minutes, and then we have a big interview coming up at about 12:15 with Knightscope. BTU, nice red to green in talks to buy CODQL. I assume that's just a smaller coal play. We'll check out BTU. Peabody Energy. Let's see in the news here. Coronado. Let's see. What's the what was that ticker again, Jay? KODQL. Coronado Global Resources. I don't even know. This thing doesn't even look like it trades, to be honest. All right, guys, let's play that intro. While the intro is playing again, remember your homework assignment. Throw something in the chat you want to stock you want to look at or something you want to chat about for the next 20 minutes, and then we're gonna get potentially Mr. Hot Stocks Luke on, and then we will have Knightscope on a little bit after that. Fun show today. Smash the like if you haven't already. We'll be right back.
This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a
breaking news. Alrighty, y'all. All right, Jay Rice wants to talk about aluminum. Biden banning Russian aluminum. All right, so I think this would help U.S. Aluminum manufacturers, right? I don't know how much aluminum we import from Russia. I don't know who what are some U.S. like aluminum companies. Aluminum stock. Let's try to find some real quick. Alcoa. I think that ticker's just A. Or no, it's AA. Alcoa. What does Alcoa do? Vertically integrated aluminum company. So yeah, I mean you can see the spike here. Woo. I mean, look. It's shitty because these sanctions on Russia, for the most part, end up hurting not just like everyday Russian people that really have no, you know, say in what's going on with the war, what Putin and the Russian military is going to do. But I mean, like, think about it. Like here in the U.S., like this isn't going to be good for inflation. Having cheap imports from Russia helps bring costs down as for manufacturers that have to buy this aluminum. So there's a chance that these sanctions, not just a chance, it's likely that these sanctions will increase the price for aluminum, which has actually been one of the commodities that has been falling in price over the past, 6 months or so. You can see here at the top here of Alcoa's chart, when Alcoa was trading about $100 in March, 6 or 7 months ago, aluminum was at like all-time highs. If you look at a chart of just the commodity price, aluminum futures, whatever it is, the chart looks like this. It's been going straight down since March. That's good for consumers at every level because when companies, when people producing things needs to spend less, when their raw materials gets cheaper. SPY 359 broke. All right, we'll go back there and look at that in a second. But when things get cheaper, those prices get passed down at every level. So it starts with the raw materials, and then when when people turn the aluminum into sheets of aluminum, and then they, use that to build a machine, whatever it is. Like at every level, when the raw aluminum is cheaper, that price gets passed down, and it's better for the consumer. So these sanctions will most likely make those aluminum prices jump back up a little bit. And again, I mean, it's already out of everything we were dealing with. There was a lot of data showing maybe we were making progress in certain areas of inflation that were driven by supply chain issues. If you look at used car prices, which were super high during COVID, chicken wings, there's a lot of examples of where prices have actually normalized. But because of this Russia-Ukraine situation, things like aluminum, things like wheat, things like gas have gotten even more expensive than they already would have been when just dealing with the inflation brought on by COVID. So you kind of have these back-to-back. I don't know if you really want to call them in COVID. For sure, you can call a black swan event. I don't know how much you can call the Russia-Ukraine invasion a black swan event. But yeah, I mean, there's the aluminum prices are going to go up because of this. And that's the shitty thing, is that really, I mean, outside of, direct military intervention, the only thing we can do, the U.S., to really disincentivize, punish Russia for what it's doing in Ukraine is these economic sanctions, which again, oftentimes come back and hurt everyday people, not just Putin, not just the Russian military, but people like you and I, who will end up having to pay more for certain goods because the price of aluminum is going to go up because of this. I mean, it's not just, Russia, sanctions against Russia. It's the same thing with, I think earlier in the year, we banned certain solar panels and parts from China to try to boost U.S. production, which I'm fine with. Like, I'm fine with, economic policies, sanctions, tariffs that make importing things harder, especially essentially only if it means promoting more domestic production, because we know there has been a big loss in high paying good manufacturing jobs in the US dating back to like the 80s. We've basically been outsourcing all of our production and manufacturing to places where you can get stuff cheaper, like from importing stuff from Vietnam or China or Mexico, and basically saying, yeah, we, because people. So yeah, I mean, if the solar, banning solar panels from Russia or from China, sorry, means that we're gonna build new plants in Arizona and whatever to build these, and there'll be new jobs for Americans that get paid $20 an hour or $25 an hour in factories benefits, I'm for that. But that doesn't seem like what's going on with the aluminum tariff. It doesn't sound like, I mean, I guess it will be good for Alcoa and other U.S. companies. So, I don't know. At this point, it seems like, what can be done from an economic sanction point against Russia is being done, not just here in the U.S., but in Europe as well. And we've seen energy prices climb over there. So, I don't know. I mean, I think, not just from a markets perspective, from a financial perspective, I think we're all hoping that the war in Ukraine, the parties are able to come to some sort of agreement and whatnot. And yeah, I don't really know what else you can do about this right now. But yeah, good for the aluminum stocks. I don't know, is there an aluminum ETF? We can check that out. IYM is the basic materials. Another thing that I did want to discuss, and this was just kind of from a high level, because I saw there were comments about, I guess they asked Biden point blank if he thought a recession was coming, and he said, like, potentially, but, I don't really know exactly what he said. But to people out there, it just, I guess, in the way that it's being reported, and both like in how the market's being reported and how the economy is being reported, you can't really have it both ways. And I think it's important to remember, at least, this move a big part of this move right here in the S&P 500 in the last 2 months from mid-August to now we're in mid-October, when SPY was at 430 mid-August. A lot of this move down is driven by the fact that inflation has remained sticky because of a strong economy, right? It hasn't mattered how the Fed has been raising rates. We've continued to add jobs. Wage growth has continued to grow. Spending has remained, right? If the Fed, if we got a lot of data showing that right when the Fed started raising rates, the economy was coming to a grinding halt, it would be worse news for the economy. But I don't think the market would be where it's at right now, because we wouldn't be thinking about how long and how high rates will have to be to really slow this economy down. So it's more just a grievance I have, and it's not, with one particular news outlet. It's with all of them, with all the mainstream outlets. The report, it has to be, you have to tell that if you're going to talk about the market being down so much, you have to say, in part at least, because the economy has been very strong, and now, the Fed is expected to continue to raise rates for longer than initially expected because of the strength of the economy, because of the resilience of the economy. And if you're going to talk about, recession, that's fine. But you have to say, for what we've seen so far, the economy has remained strong. Hurt Scrambler saying Biden removed Trump's steel and aluminum tariffs. And yeah, I mean, I'm in favor of, like, I think people get mad about certain things when it's like, if a certain policy, and this goes in line with, I gave this example yesterday of where environmental groups got, New York to shut down a nuclear reactor because it was heating up water, and fish were getting sick and dying because the water was getting too hot. And when they shut down the nuclear reactor, power bills went up for, real everyday people in New York City. So imagine explaining to these people, oh yeah, the reason your energy bill is up 15% this week is because there were some fish dying. There might be some people that are like, oh, why were we removing the tariffs from Mexico and Russia or whatever? We shouldn't want to import from those countries or whatever. But if it helps bring prices down for everyday people, I don't know how you can get mad about it. That's how, that's what we should be worried about. Fubo just got a $28 price target. Man, someone pay me, someone give me one of these analyst jobs where I can just freaking pick a stock and make up a number. $28 for this? I don't know, man. And this is very anecdotal, and I don't know. I have no data, nothing to back this up really. But I feel like for me, it's a good gut check for me for a company where if I hear like SoFi, for example, which is like an online bank and lending platform, and SoFi would probably tell you that its core customer base is like younger people, right? I doubt SoFi's main target audience, they're going out for, retirees and stuff. I think they're mainly going for college kids and stuff. I don't know a single person, literally not one person in my day-to-day life like uses SoFi, not even just as a lender, but as like their everyday bank. And I feel the same way with Fubo. My friend group is 100% Fubo's core target demographic, young people that watch sports. I have one friend who I recommended, or he was looking for like a way to watch sports games. Oh shoot, that reminds me, guys. I got to someone remind me, and I think tomorrow I got to cancel. I started a free YouTube TV a free trial so I could watch a baseball game over the weekend. I got to remember to cancel that. But anyway, I had a friend who was looking for like a streaming service to watch live sports, and I knew that was Fubo's thing. And this was back when the stock was going crazy. I want to say February 2021, so like a year and a half ago. I was like, oh yeah, check out Fubo. Like I hear about this all the time. I had never used it. He signed up for it, paid for it for like a few months. Was like, oh yeah, I don't pay for that anymore. It wasn't worth it. I guess YouTube TV, it was like the same price. You got all the same games. To me, that's a big red flag. That out of like, you know, a bunch of my friends that would be, again, not just potential customers for Fubo, but their main customer base that they're advertising to, right? Like young people that aren't going to have real cable. So, already looking for streaming services into sports. That's a red flag. Again, it's super anecdotal. It means nothing in terms of the company's revenue, its growth outlook, whatever. But I mean, look, the company, we know the stock went crazy. The company itself has had different ambitions, from starting like an in-house sports book that it scrapped, all this stuff. Disney was an investor, which that was one of the things that I liked about it, is because my bull case for Disney is it's ESPN and live sports. I think people overlook just how valuable that is. Having like a live sports audience, and the fact that Disney was into it was, the fact that Disney was invested in it was showing me like, oh, maybe Disney thinks like Fubo's a real player, or a real threat in the live sports space. But I think Disney has bombed out of its position in Fubo. Not exactly sure. All right, let's see. Rather buy Roku at 50. Yeah, I think there's a lot of because Nintendo's an over-the-counter stock, and a lot of brokerages don't have it. I think, let me see if it's on Robinhood. It is weird to me that Nintendo, I think it is technically over-the-counter, but I think it's on Robinhood. It's on other apps, I believe. The ticker is NTDOY. But that's weird to me that Nintendo's an over-the-counter company. It's a whoa, holy cow. I bet no one can guess. No cheating, no Googling. No cheating, no Googling. I bet no one can guess what year Nintendo was founded. BTU $2 off the lows? Jay, you mean the highs? Or no, you're talking about these lows that it hit down. Why did it dip so much earlier? Why did Natty Gas dip too? All right, Brian Blockchain's guessing 1973. Ooh, Jordan Spieth, new EA game. So they released there's 2 new golf games coming out, because 2K, which is owned by Take-Two, has one with Tiger back on the cover. Let me see when this one comes out. Oh, it doesn't come out till spring 2023. Or no, sorry. The EA one doesn't come out till spring 2023. Let me see when the 2K one comes out. Holy, this is driving me crazy. Yeah, I'm literally on the website. I gotta show you guys this. This is driving me absolutely crazy. It's PGA. This is the official website. PGA Tour.2K. So this is the new game. This is not the EA one with speed. A different. Oh, okay, it says it right here. October 14th. Is that when the game actually comes out? And that's what was frustrating me so much with this website. It doesn't say. Let me try this. PGA 2K23 release date. I think it might be like. Oh wait. Standard console set for the 14th, so Friday. Let's go back to our Benzinga Pro. I wonder if I doubt an EA golf game is enough to really move the needle. Plus, I mean, to be honest, I don't think it matters about the actual gameplay of the game. If there's a two golf games out there available for people to buy, and one's got Spieth on it and one's got Tiger Woods on it, which one do you think people are buying? Come on now. Speaking of golf, how's I've seen what's what's what the heck is Callaway's new ticker? Isn't it hot? Like HODG? Modge, MODG. Well, I don't even know what that. I don't know what Modge. I hate that new ticker. This thing's ugly. I don't really know why. Is the outlook like not good for? All right, so someone just lowered. So obviously there's a reason people are not liking this right now. I wouldn't be surprised if like demand was just super high for golf equipment during no, you're not wrong. It used to be ELY. It used to be ELY, and then they changed it to incorporate part of its holding company. So Callaway Golf bought Topgolf, or at least like a majority aspect or a majority stake in it during COVID. And I guess I'm just trying to figure out where the ticker comes from. Where the MODG? There's got to be a reason behind it. I think it might be like there's like a parent company that operates Callaway and Topgolf together. You're not old. I never said that. Oh yeah, I forgot to give you guys the answer. Nintendo was founded in 1889. I don't think they were making video game consoles back then. I wonder what they were doing, but that I don't know. You could probably ask like 100 people on the street that trivia question. Not a single one would even get within 50 years of it. Most people would probably say like at earliest, I would have guessed like around, I don't know, 1950s, maybe post World War II. All right, wait, let me see if we can figure this out real quick. There was a huge buyer January calls a week or so ago, way out of the money. I think the 60s. Maybe someone new. Although, I mean, I don't know. Maybe this move, because it's not like this thing's like going crazy today. So again, if you're just joining us, Alcoa, ticker AA, is an American aluminum company. Stock getting a nice pop today after a news that Biden is either weighing a ban of Russian aluminum imports or already announced the ban. Either way, obvious good news for a U.S. manufacturer, right? If the ban is going to limit the quantity of supply of aluminum, then the price will go up. So that's good news for Alcoa. Jay here is saying there was some unusual call buying in it. I don't know. I always get like, I don't know. There's always people buying a bunch of calls and inputs in all different things to hedge positions to what, to whatever. All right, I'm still trying to figure out why the Callaway ticker is Modge. Gotta be a reason. Do we have any good, I don't know, internet detectives? Can someone try to figure this out? Oh, actually, I'll be honest. I have no clue why the ticker was ELY in the first place. I have no clue. reading it right now. I'm not seeing anything. That might be the most random ticker. Yeah, I know what the ticker is. I'm saying why is it that? Why is it MODG? Like what significance? Because they changed it from ELY to MODG. So you got to think there's a reason someone went to the company, hey, you know what we need to do right now? We need to change our stock ticker. Why? Well, here's why. All right, what's the new one? MODG. Why? To me, it would just seem weird if they were like, hey, let's change our stock ticker to a completely random. Oh, Modern Golf. Modern Golf, Jay is saying. That makes sense, but wait, where does it say? There's nowhere. Topgolf, you know, Callaway. They have Travis Matthew, Odyssey, OGO. Oh, there you go. Well, all right. So that makes sense why the first one was ELY, because the founder, Eli Callaway. But it still doesn't make sense why, unless like Modern Golf, unless it's a. Okay, here we go. Thank you, Jay. Thank you. Helping us get to the bottom of this. Lunchtime, Kenneth is saying. Yeah, it is past noon, so you know, typically we'll check out the volume on the SPY, but oh, SPY's I didn't even know SPY was coming back up today. Why didn't anyone say anything? Nice little action on the 5-minute there chart on SPY. You can see the volume down here. So you know, down here, these little bars on the bottom. I don't know if you guys can see this. Let me try to zoom in on them. Right at the open, highest volume bar you can see here, volume around 3 million shares traded, and then by 9:35 that drops off to 2 million. By 10 o'clock you're now down in the 700,000s. Last 5-minute candle we closed below 500,000. So yeah, during lunchtime you can expect to see this volume drop. That's not to say the price is going to go one way or the other, but just typically, you know, potentially a little bit of less volatility here. And then as volume picks up again toward close and in the afternoon. But again, nice little action here on the 5-minute chart on the S&P 500. We'll see. It looks like after the open, our intraday high is right around 360. So we're at 359.40 right now. We'll see if we can get up to that 360 level. If we do break that intraday high, could be a good afternoon. Oh, but dude, Eli Callaway died in 2001. I'm looking at his thing right now. So they kept the ticker Eli for, you know, 21 years and then said, all right, time to switch it up. But I did find a article. This is what I was looking for. And I didn't find the article when I searched like Callaway Golf ticker change. No, this didn't pop up. But then when I searched modern golf, finally, modern golf is centered on evolving the game so it's more accessible and inclusive, particularly for younger players. This means promoting a more relaxed atmosphere on traditional golf courses as well as providing off-course golf-centric entertainment options such as Topgolf. Yeah, which I agree with that strategy. I think there's a lot of people, you know, like Brooks Koepka included, who's been famous or been quoted saying, you know, he thinks golf, at least from a leisure standpoint, should be like 14 holes because it is a very much like big barrier to entry. It's not like, you know, basketball or soccer. You just show up to the field or the court with your shoes and the ball and you're good to go. You need like a set of clubs and the right shoes and the right clothes, and you got to get to the course. Then you got to pay for the round and the court and the cart and the balls. And there's all these things that, you know, keep a lot of people out of golf. So it sounds like Callaway's mission, or at least what they're promoting, this modern golf idea, is that the golf doesn't have to look like, you know, country club only of the 1980, like think like Caddyshack. You know, it doesn't need to look like that. It can be it can be different in modern time. Yeah, I've been seeing people love Tim Kim or Tom Kim. The what's it? Isn't it? It's Kim Joo. Yeah, South Korean player. He's been like blowing up on a bunch of social media. I've been seeing more about Tom Kim over the past like 2 weeks on social media than uh any other star or any other golfer out there. Cruises should be popping. Why? Why should cruises be popping? Oh, I mean, they are popping. I don't know what you're talking about. Up 8%. Let's see why. What are the other cruise lines? Royal Caribbean, RCL up 6% too. All right. Yeah, I don't know why why are all the cruise lines up? Someone tell me. I think it's because NCL got an upgrade. Yeah, but I mean, I don't know. Maybe it's just because these names have been so beaten up. Like, look at Norwegian on a daily chart. Like, we're well below. I mean, we are at like COVID lows basically. Like, this thing was a $50 stock before COVID. We're still at $12 now. We're almost where we were right at the onset. I mean, this thing got all the way back up to 35 mid-June. So it would make sense, I guess, when you compound the fact that we're down this much and it's getting an upgrade, potentially showing some bullish sentiment returning, why the stock would get a nice pop. But you haven't really been seeing a lot of upgrades and downgrades move stocks like that. Care on cruises, they have a US debt thing. Long term. I don't know. Pat McAfee show going on Fubo. Yeah, and again, like, that's cool for Fubo, and I don't know, maybe I don't know where Pat McAfee was doing his show before, if it was just on YouTube or what. And that's like good news for Fubo, and if they're trying to step up their original content and more offerings for people, but to me, that's not something that necessarily moves the needle, right? I don't know if anyone out there is going to buy a $60 a month Fubo subscription just because Pat McAfee's show's going there. But again, it might be a sign that they're moving in the right direction in terms of having good original live content that the audience wants to engage with and is willing to pay for. Different McAfee, Shelly. You're thinking of John McAfee, the crazy like cybersecurity guy. We're talking about Pat McAfee, the former punter for the Indianapolis Colts, who's since become kind of a sports media personality with his own show, formerly on Barstool, I believe. Now doing his own thing. Apparently now with Fubo. Yeah, I don't know. I don't know anything about that. Didn't John McAfee, like, I don't know. Some people think he faked his death or something. How we doing? S&P, wow, gave up, let's go to the 5-minute chart. Gave up some of these gains in the last, like, 8 minutes while we were talking. Look at this. I was just saying how SPY was looking nice on the 5-minute chart. Not anymore. That's the beauty with charts. They can change just like that on a dime. Free happy ball Goder. Go there. Happy. I don't know what that means. Oh, ball go there. She's making fun of sports. I see how it is, Shelly. Making fun of Upstart. I'm actually down for Upstart. I'm down. The one issue is I don't know, like, currently, like, Upstart's whole thing was being able to get, like, actually decent loans on there very easily and quickly, and I think, like, obviously the demand for loans is going there has been crushed as interest rates have risen, made money more expensive to borrow, would be my one concern here, but I think out of the very, like, high growth companies that went crazy. I mean, look at this stock. This stock went from a $30 stock in December 2020 to a $400 stock by October 20. I mean, and everyone should have been, in hindsight's 2020. We all should have been able to look at this chart, not even the chart itself for Upstart, but what Upstart does. And I think I did it on the show as like a little experiment. I was like, let me just go to Upstart's website and see actually how easy it is. And within like legitimately 2 minutes, I was qualified for like a $20,000 loan where they were only asking for like 2,000, back on, so it would have cost me essentially, I would have had to pay back like 22 grand for a $20,000 loan. Like, it was like a great deal. And I was just like, all right, this is way too easy. If a bunch of people are doing this, like we're due for a little pullback. But out of the different growth stocks, the kind of Kathy Wood-esque ARC stocks that were super high growth where the stocks ripped for a bunch, Upstart is one that actually makes money. And you can't say that about a lot of these companies. I mean, look, it's got a decent price to sale, just a little bit over 2. If you go to the financials, we go to the income statement, you can see bringing in a total revenue of nearly a quarter or more than $250 million, or sorry, a little bit less than $250 million last quarter, 300 the quarter before that, 300 the quarter before that. So definitely you don't like to see this revenue dipping, but the fact that it even has revenue already and it's kind of a growthy company. Again, I don't know about the outlook for it, like short term, intermediate, as rates continue to rise, but I am interested in it more than JRP, you can say that. I think Favre has done his personal image a lot of damage with his different antics. But all right, guys, it is 12:15, 12:16 now, actually, so we're a minute behind. Very special treat today we have on Benzinga Live. I've got my man, Michael Murray, joining us with us today. Woo! Michael Murray, how you doing today?
Aaron Bree, we're doing good, man. How about you?
Pretty good. Your chair is a lot higher than mine. Should I adjust mine so we're more...
I can adjust mine. You can adjust yours. Whatever works for you, man.
There we go. I just made mine shorter. All right. Well, tell us what we've got planned for us today.
We have a really exciting interview with Bill Lee, the CEO of Knightscope. Every time we bring Bill on, there's always something exciting going on with Knightscope. One of our favorite people to interview, always something new that they're working on. And today they have a really big announcement that just came out yesterday. We're going to dive into the details of that. Bill is going to give us the down low on what Knightscope is up to. We're going to find out everything about their big announcement.
Beautiful. Without further ado, I'll go ahead and let you take it over, introduce Bill and get him on the stream. And I'm excited to watch the interview, Michael.
Fantastic. Let's get rolling. Let's bring on Bill Lee, the CEO of Knightscope, and get started. Bill, good to have you with us as always. How are you?
Good. M&M and DTW. Is that what I heard?
Something like that. We'll take it. We'll take it. Bill, really exciting to have you here. We always enjoy having you on Benzinga Live. And as always, every time we talk with you, something new, something exciting just happened. So it's a real pleasure to have you on and get the details about the big announcement you guys just had yesterday. Start there. Take us through the acquisition of Case Emergency Systems. What is it? Why is it so important? What are the details on this deal?
Awesome. Well, we appreciate being back with you. Our long-term mission is still to see if we can make the United States of America the safest country in the world. And I think in order to do that, we need to put 1 million machines in network. And Case Emergency Systems has an awesome foundation of 7,000 devices out already in the field across the country that give us a really strong stepping stone to do a massive public safety infrastructure upgrade. The team there has, it's a profitable company. As we disclosed in the release, they did, I think, 5.4 million of revenue last year. The company continues to grow. There's some technical synergies. There's some operational ones, and we can get into that if you like. But we're really excited. The Case team's excited, and we're growing the company as we said we would.
It's amazing. All right, good recap there. And there's a couple of things that we want to talk about on the synergy side and everything else. We've got about 15 minutes, so we're going to delve into all of this with you and get as many details as we can. So, give us an overall look, right, in the safety communications market. What exact synergies and what big opportunities does this give Knightscope to kind of augment the business and what you guys have already done with autonomous security robots? The safety communications market as a whole, what new opportunities does this open up?
I think if we just look at from a sales standpoint, we've got a lot of overlap in terms of clients that we're calling on, be it the U.S. federal government, it could be major healthcare providers, certainly a lot of education, large campus educational institutions, airports, rail. We pretty much have nearly 100% overlap on common clients. So we're really excited about integrating the marketing and sales aspect, actually seeing to put a lot of the case technology on the Robot Roadshow that you've been able to participate in will also help that product exposure. I think from a technical standpoint, there's a few things that we've been needing to either improve or want to work on. They do have some of these devices solar powered, and I think that possibly could help us with the K1 tower and the hemisphere. They obviously have a lot of telecom cellular expertise, which we have a little bit less of, and that's going to be very complementary for us. And new product development is going to be great. Maybe less glamorous, but important for us. They have 9 production and logistics facilities all across the country. Now that we're continuing to grow, being able to leverage some of that back end in terms of just logistics for parts and finished goods inventory and the like is also going to be operationally very helpful.
Outstanding. Okay, and I'm glad you ended on that point because that kind of tees me up for exactly what I wanted to ask you next. And you mentioned it earlier, 7,000 devices already deployed across the U.S. with case emergency systems. What does the path forward look like in terms of growing that number? Do you want to continue growing that number, and what's going to happen in order to continue growing the number of devices they have deployed?
I think it's a 1-2 punch. I think one, we need to continue to grow the base business that they already have, and we've already got an influx of interest to do that. There's this might sound a little odd for some folks. There's a lot of infrastructure across the country that's still on landlines that need a massive increase, not just to get to wireless and not to 3G or 4G, but to 5G. So that base business, I think, will continue to grow. But the long term, I'll say medium and long term opportunity is to do a significant upgrade with artificial intelligence. Take a lot of the capabilities that we already have at Knightscope, as well as maybe some other things that we might have up our sleeve, and add that to the existing infrastructure. I think we could create a lot more value for public safety professionals. Remember, somebody already did the risk assessment and put these in specific locations because there was a risk already in terms of public safety. They already have power and they already have some form of telecommunications on them. So that kind of fixes at least 3 of the initial issues. And if we can come up with a really attractive upgrade package working with the existing clients very carefully, I think we can make a big impact in a much shorter amount of time.
Terrific. And I think the most impressive part of all this, to me especially, right, is when you mentioned that overlap, how it really does work out so synergistically between, like you said, the people who have already completed the assessments, understood there was a risk in the area. And it seems to play in perfectly with what you guys do with the need for the autonomous security robots in these areas that have that need already based on these assessments. So it seems like a perfect fit there. If you're looking at the business holistically, are there more acquisitions or more companies that you guys might look to acquire over the coming years, like case emergency systems, that you guys want to continue acquiring and continue growing the business that way?
I'll answer it 2 different ways. You might recall from my background, I was former director of mergers and acquisitions at Ford Motor Company. My last job there, I actually bought 22 companies in 11 months. Half of the management team at Knightscope has significant expertise in M&A, and as part of the public listing earlier this year, we asserted that we might become acquisitive over time. So the answer is yes. Second, perhaps what we're looking for, primarily around 3 categories. 1, top line revenue growth, that's obviously synergistic. 2nd, technology, and 3rd, talent. In this case, there's a 4th one with case on terms of facilities. but they kind of check all the boxes, and that made us for a really exciting transaction.
What can you tell us about the financing side, how the company is set up for cash on hand and everything else? Is there anything you want to talk about on that side of the transaction?
Yeah, we were able to get this financed in a very efficient way, despite the market headwinds and all the chaos. We issued some in the process of issuing some convertible notes that have a conversion price at, I think, at $5, which is a premium to the trade today. And we've got some flexible ways to pay that down over time. So if we end up paying it all down in cash, it would be a non-dilutive in terms of issuing shares. So we're just glad that despite the market volatility, we can still continue to move forward.
Outstanding. Okay, so market volatility, market headwinds. You said both of those terms right there, and we have those in spades across all industries, all sectors right now. It's certainly a turbulent time for the markets as a whole. Now that we've got the specs on this deal, can we zoom out a little bit? Let's have a look at your market, your industry, and what you guys are doing, and especially the market as a whole, too. What are some road bumps that you see coming up in the next few months? What is Knightscope doing to hedge risks and problems that you guys see with the Fed and rising interest rates and geopolitical uncertainty? What do you think the market as a whole is going to look like for you guys in the next couple of months, Q4, and what are you guys doing to kind of preserve yourselves and look ahead here?
I think the first comment is not to be cute, but criminals and terrorists don't care about anything you just talked about, right? They're not sitting there in front of a Bloomberg terminal looking at stock prices, volatility, interest rates, or anything else. Like, life goes on. There's a lot of criminal and terrorist behavior that goes on every single day. Actually, if you look up the old FBI crime clock, every few seconds, some horrifying violent or property crime is occurring in our country. So we don't have the luxury of just like, oh, well, times are tough, we're just gonna just hunker down and just not do our jobs. So we need to push forward. Like any company that's continuing to grow, you have to do a lot of blocking and tackling. Probably, to be fair, the one that's driving us a bit nuts is the whack-a-mole with the supply chain stuff. And you would think you'd fix, oh, it's obviously the chips or whatever. So, okay, well, we fixed that problem. Then, oh no, we're out of resin to build the composite parts for the body. Okay, well, now let's fix that. And then you think everything's all good. And then literally some resistor that's no longer in production is at end of life, kind of messes up the whole thing. And then the opposite happens. Like, everything actually gets cured, and then now you have a flood of production work that needs to get done and deployments and that sort of stuff. So, we can't sit here and whine and complain. We just got to work through the problems, and that's what we've been doing.
Absolutely. Well, supply chains have obviously been one of the biggest topics being talked about for the last couple of years. So ever since the start of COVID, it's affecting many different industries, many different sectors. So certainly something to keep an eye on. Give us a look specifically at Knightscope too right now for you guys. Obviously, the case acquisition is very exciting. You guys are going to be able to add a lot to the business, it sounds like, with that. For you guys specifically with robot production, with fulfilling orders, how does the business look like for Knightscope as of right now?
The point I just made is kind of where we're at right now. We fixed all the supply chain issues temporarily. Now we got a flood of production that we need to work on and deployment. So now we're pulling our hair out for different reasons. So we're working through a couple $1 million backlog of orders. We're excited to do that. We're thankful for our clients being very patient during these kind of crazy times. So we're working through the backlog. We've got more orders coming, obviously, and continuing to grow the business. I think this year, possibly next year, and hopefully not the year after, the supply chain stuff is going to have a little bit of drag. But again, our clients expect us to perform. The criminals and terrorists don't care, so we just need to kind of push through.
Crime doesn't stop no matter what the geopolitical headwinds are or anything else happening on the macro scene. I think it's a great point.
That's exactly right.
100%. So last thing we want to look at here before we start to close out, we talked a lot about the overlap, right, with Case and the relationships that they have and how this is going to play so well into what you're doing at Knightscope with the autonomous security robots. How are you going to drive those relationships forward? Is it going to be a reliance on road shows? Will it be direct connections? What does that path forward look like to driving revenue here, leaning on those relationships that are so synergistic between you at Knightscope and Case?
I think it's people and process. One of the great things is the Case team has a small marketing and sales staff that's going to be complementary to the team we have. There's will be a lot of more efficiencies in terms of lead generation. I think long term, if we're going to build a $30 billion company that kind of looks like a defense contractor, but instead is focused on the Department of Justice and Homeland Security, the 19,000 law enforcement agencies and 8,000 private security firms, we have to be the go-to technology provider. So every shape, form, size, from small incognito versions that might be in a U.S. federal courthouse up to the largest machines that would be patrolling a city or a highway, and everything in between, both indoors and outdoors. We're going to want to be able to say yes to every client that has an issue, and hopefully we can be helpful. And that's going to mean expanding the portfolio and also spending time being in front of clients. And that Robot Roadshow, if you want to check it out, go to knightscope.com/roadshow, has been extremely effective in getting decision makers to come see, touch, feel, talk to our professionals that are, security, law enforcement, ex-military folks that have a lot of experience. Frankly, we've done this now for so long that we've probably forgotten more than most people would know how to do this. So those sessions in the pod are extremely helpful for us and for the clients.
Absolutely. Bill, we can't thank you enough for coming on as many times as you do to share the details, especially now during what I'm sure is an insanely busy time for you and the team. Anything else you want to leave our investors with? And I believe you also have a tagline too about shorting the criminals, something along those lines.
Oh, come on. Long Knightscope, short the criminals. Actually, 5 o'clock Pacific tonight, we've got a town hall. I'm back on the hot seat, get a flood of questions from our investors and supporters. So they'll be building on the questions you've already asked this morning, and I appreciate being here with you again.
Awesome. It's always a pleasure. Bill Lee, CEO of Knightscope, thank you so much for joining us today, sharing all the details. Can't wait to talk with you again soon.
Good to see you.
All right. We'll bring back on Aaron Bree back here. Aaron, it was Bill Lee, the CEO of Knightscope. Interesting stuff. He's got a lot going on right there, but that was awesome. We got all the details on the Case acquisition, everything they're going to work on over the next couple of minutes. Any thoughts from you?
No, I mean, great job, Michael. Great job, Bill. An exciting company that I always like to learn more about.
It's cool stuff. Yeah. I mean, like I said, I love the fact that we got to get him in so quickly, too, with the announcement just being yesterday. We kind of got that fresh news and the fresh details on it. And obviously the town hall tonight, too. It sounds like there's going to be a lot more discussion. So good stuff to keep an eye on. But yeah. I will leave this back in your capable hands. I'll let you take things away.
Will do. And that's what Benzinga Live is all about, baby. Bringing you guys news as it happens, straight from the company, straight from the source. But yeah, guys, we've got about 29 minutes left of this beautiful Wednesday show. What we're going to look at, so we're going to talk a little bit about the kind of big tech trade. It was funny because I had, for the last, I feel like we talk about Apple and Tesla stock, enough. But right now, I think we are at a pretty pivotal point when it comes to looking at big tech as a whole. We can look at the Qs, which is just your NASDAQ 100 index. We are really, if you go back, you look on a chart, we're sitting right on this level that we were at September 20th. If you guys remember, there was I want to say it was during this time. I guess it's not really reflected on the Qs chart that well, but I know it was certainly the case for Apple. There was about maybe this is the period that I'm talking about. There was about a 6-month period where Apple didn't really do much, right? We were just kind of trading sideways. Let me figure out where this was. So I started in Benzinga like here. Yeah, it was going back. It was here, we basically didn't do anything from Apple from, September 20th to here. We're trading, and we're basically back at those levels right here. September 20th. Or sorry, September 2020. Why can't I see the... Oh, there we go. I had the price blocked on my thing. 137. We're at 139 right now. And Apple for a long time has kind of been the leader of the market. Like the S&P 500, the market has kind of looked at Apple and said, hey, are you up today? All right, we'll be up too. Are you down today? We'll be down too. Of course, it's not that simple. We've had different periods, different times where value has been in favor, growth has been in favor, energy has been in favor, energy has been out of favor. But Apple has long kind of been the line leader for the rest of the market. And a lot of people are saying that could be over for Apple, especially if demand for electronics and whatnot continues to show weakness as other parts of the economy, travel, services, other goods, continue to rise. Apple may lose its footing as the leader of the market. I don't think that's necessarily bad news for the market. I don't think you want the S&P 500. I don't think you want the stock market as a whole to be dependent on one stock. Not that it ever really was. I mean, of course, when days when the market was up, I'm sure it happened to coincide with good news or good economic data that also helped Apple. But looking at Apple's chart here, I mean, this isn't this path, this growth that we saw in the stock from March to September here, this 6 months, that's not sustainable. This isn't sustainable. So to see Apple coming down, I don't hate it. I don't love it because I'm a big holder of Apple. Every time Apple goes down a bunch, my portfolio doesn't look as great. But looking at the valuations for Apple, still, I mean, the price to sales certainly very expensive. But the forward PE is reasonable, under 22. And historically, that's pretty cheap for Apple. So the question becomes, do you think that the Apples, the Googles, the Amazons, the Microsofts of the world are able to maintain the growth these companies have been able to put up for the past 20 years? I would say most experts would say no, that growth, the growth aspect is kind of played out for these stocks, right? I mean, if you look at a company like Apple's market cap right now is $2.2 trillion. Is it realistic to expect that market cap to triple in the next, however many years? Probably not. But does that mean that Apple, there's the flip side to that is now because you don't have the growth, but you have more value baked into these stocks. You have quarter after quarter of these companies making billions and billions of dollars. And you want companies that are able, and these companies have never been, right? No one has ever bought an Apple for its dividend. No one's buying it for its dividend now. It's only 0.7%. But as these companies continue to grow, continue to make more and more money, there will be value returned to the shareholders. So there will always, a large portion of my portfolio, I shouldn't say always, for the foreseeable future, is comprised of a lot of these FANG names, right? Your Apples, your Amazons, your Microsofts. Google is honestly, if I had to buy one of them, and when I say them, I'm talking about these big name tech companies. If I had to buy one of them right now, I think I'd buy Google. I think it's one that actually has Google will get directly affected in terms of ad sales or ad revenue in the event of an overall economic downturn, but it is insulated from direct consumer sales. So like Apple, if we get a big recession in the US for a year, people are going to be buying less MacBooks. People will still be going on Google App. People will still be watching YouTube. I think Google has other revenues of its business that will hold up in a recession better than some of these other companies. Just my 2 cents. Apple should use some of that cash, would expect some large acquisition from them soon. Yeah, I mean, and that's the thing. So just a couple weeks ago, Boston or FinTech Sandbox had its Boston FinTech Week, and FinTech, just financial technologies, right, has kind of evolved from companies like Square and Block, your more kind of true FinTech companies, bled into all these other industries where you have like, healthcare FinTechs, education FinTechs, that are helping to try and do different things in their respective industries. But one of the themes at the event, and it was a bunch of different startups and fintechs and investors, where the investors were like, yeah, people are talking about how this is a terrible time to invest in companies. There's great markets to buy and there's great markets to sell. And right now is actually a good buying market. So there are a lot of investors, a lot of companies coming out and looking for acquisitions. Of course, we saw who was it Microsoft that came in and acquired Figma? Who was that? Oh, it was Adobe. You know, Adobe came in and people thought they overpaid, but they probably looked at Figma and said, hey, this would have been like, you know, at least 25% more for the acquisition a few months ago. This is a deal right now. So I do think there are companies out there looking at, Apple, way more international China exposure. So I think out of the big tech names, like I said, Google is one that I would, if I had to pick one of them to buy right now, I would buy that one. Amazon, you can make the same argument that, you know, they're kind of insulated. It sounds silly saying it, but that they're kind of insulated from because even if Amazon's, a lot of Amazon's appreciation in the stock, a lot of the growth of the stock hasn't come from, you know, revenue from its online marketplace where you go on Amazon and you buy a new, blender. That's not where most of Amazon's growth has come from. It's come from its AWS, Amazon Web Services. So I guess you could make the argument that, like, you know, in a really bad recession, if a lot of these companies or if companies go out of business and they don't have to pay their web services bill anymore, then that, would be bad for that part of the business. But for the most part, I'd imagine that people, you know, that are paying AWS to keep their website, keep their app running, are going to continue to do so. So I do think at least Amazon does have a vertical that will be insulated from a broader decline in demand from consumers. Whereas Apple, I don't really think, I mean, we hear about Apple, you know, trying to beef up its subscription revenue model. People pay for Apple Music. People will pay monthly for, I pay, like, I want to say it's 99 cents a month, maybe. 99 cents a month. Does that sound right? For like iCloud storage, like an extra 50 gigs of that. That's worth it to me, right? I pay $12 a year to like literally never have to worry about, having enough data on my phone because everything gets saved to the cloud that has 50 gigabytes of. I have no clue. I don't like. I'm the least. I don't know. I have no clue like what happens with like, is that data safe? Is it gone? Am I never gonna be able to actually access it? I have no clue, but it makes me feel fine. Figma is cool. It's sad Adobe acquired it. I mean, they might put it on as a, of course. They didn't buy it for $20 billion to turn around and give it to people for free. I don't know what Figma is really. I don't I'm not on the software developer side, but from what I read about it from other people that were like I saw a lot of developers basically defending the deal, saying like, yeah, Adobe got like Figma's very valuable. There were some people out there like for $20 billion, Adobe could have built a Figma, and they were like, nah, they couldn't have. Here's why, and explained in terms and reasons why I didn't understand, but that looked like they made sense to me. I don't know. Adobe's stock, by the way, speaking of subscription revenue models, Adobe's like the bellwether for that. Well, Adobe, Netflix. Adobe does, I don't know. I think the Canvas of the world scare me. The fact that you're going to have more and more free platforms like Canva that come in and are kind of like Photoshop knockoffs that give creators more tools. But I think if you talk to anyone in the media creation space, they'll tell you Adobe is still the king, and they're all, like, it doesn't matter if you're like a TikToker or, Universal Studios, like they're using Adobe Premiere to do video editing. Heard good things re Adobe for consumers versus others in the industry. Hopefully that's true for Figma. Rocket screener alerts. No, but sounds like you do. Rocket screener alerts. Why don't you go ahead and tell me about them? You want to come on the show and tell us about what Rocket Screener Alerts is? What's up, Gregory Wanders Around? How you doing? That Adobe is a mandatory tool for all state agencies. I didn't know that. But yeah, I mean, again, like we're like here at Benzinga, like we have a bunch of different tools to help us create, videos, Instagram posts, TikToks, whatever it is, and like Adobe Cloud, our Adobe Cloud suite is something that we need. It's like it's a need for our business. It's not something that if we were looking to cut costs, they might say, okay, AB, yeah, his job is dispensable, but that Adobe subscription, no, we need that. I think a lot of companies are in that realm. Michael has the coolest, perfect speaking voice. I think I saw that James Earl Jones was retiring. Yeah. Michael's got a great, is that baritone? Is baritone the deep one? See what other stocks we're watching. I saw Netflix was showing some strength today, outperforming the market. Netflix reports earnings Tuesday, I believe. Oh yeah, it's literally right in front of my freaking face. Nice one, AB. Reports Tuesday next week. I think kind of the first one out of the big tech companies. I can't remember what Netflix did last earnings. Looks like October should have came in like July. I think it actually was decent. If memory serves correct, or maybe wasn't decent, but like the yeah, it looks like it was sometime around here. Here, let's go here. Again, we can check right here. 19th. July 19th. Go back to the chart. We're looking at dailies. Oh, now I can't see shit. Zoom back in down here. There we go. July 19th. What did I say? 17th? 19th? Either way, the stock was moving up right in and around it. And that was the exact opposite case of boom there in April when you had the stock down 35% overnight. Here, 20% back in January. And then again back in October, somewhere back here, kind of around here. When was Squid Game? I think Squid Game was really big like this time last year. I think this is the earnings report where I was like buying Netflix or calls ahead of it just because of Squid Game, and they were like, yeah, those Squid Game blew it out of the park. It like broke all the records in terms of streaming, but like in terms of actual like bottom line, does that improve revenue? I don't know. I mean, maybe over time, but I don't know. I mean, I don't like. To me, what could Netflix possibly say from 700 down here to 230 that the market doesn't already know? Like, I think the market will probably be looking for some more clarity on the ad-based subscription tier. See what that means. From a pure chart perspective, and I don't know, someone out there that follows charts better than I do will probably disagree with this. It kind of looks like this gap is trying to get filled on the downside. Go right back down here to 180. And if we do get back down there to 180, then I'll certainly be interested in buying. Here's also a theory I have of I've been noticing the same thing. So my roommate and I, we've been looking for new places here in Michigan. So pretty much like every day, every other day, I've been on Zillow looking at like places to rent. And one of my favorite things to do is you can actually filter by how long different places have been listed on Zillow. And I've been seeing that like some of these apartments are now like cutting prices because they've been listed on Zillow for 14, and you can also see the price history. So on Zillow, you can see, this house was listed at 200,000 in say August, and then in September they brought it down to 180, and it's still on there. Like that should be a screaming sign that holy shit, demand really has. And I don't know if it's the same for renters and buyers, but definitely something to keep track of is the real estate market right now. What was I going on before that? Okay. I was going to say back to Netflix. I do have a theory. I don't know if anyone else has outlined this argument, but if you think like recession imminent coming, nothing we can do about it, recession is here, I think Netflix is a recession play. Think about it. If people have to cut spending, I'm not. If I have to cut spending, I'm not going to want to, you know, like go out as much. Every time also, this was coming from SoFi. Let me try to find it. Here it is. So I wrote an article earlier. It was about Lending Tree. Came out with like a survey saying people were dating less because of inflation. And SoFi wrote like a blog post on it too. This was crazy to me. On average, women spend approximately $81 on a night out compared to $104 for men. And then I was reading more in the article, and they talk about it. For example, typical date usually involves costs like buying new clothes. So if you're counting like buying a new outfit into your going out cost for the night, that's fair. But like I don't spend $100 pretty much any time. Actually, that's not true. I don't know. It depends on like if you have too many drinks at the bar, and the next thing you know, you're like buying a round of shots for people. That's like $50 down the drain, and like you don't even see it. But I can't believe I don't believe that women spend $81 on average on a night out, unless again they're calculating into it, like buying the clothes and outfits for it. They don't even have to buy their own drinks half the time at the bar. What are they spending $81 on? And it's also not clear when they say on a night out if they mean like on a date or not, because the rest of this is pretty much exclusively about dating. But anyway, my point going back to Netflix is that I'm gonna, if I have to cut spending, I'm gonna want to go out less. I'm gonna want to travel less. I'm not gonna want to take my weekend trips to, you know, New Orleans or Chicago. But you know what will come in handy is my $15 a month Netflix subscription that gives me hours and hours and hours, countless hours of entertainment. There might be people out there who buy a Netflix subscription for the first time if they're like, shit, I'm sitting at home more than ever because I'm not going out as much because of this damn recession. So, again, I don't know, like data to back that up. I don't think streaming services really are around the last time we had a legitimate recession. But just a thought that I had, it's like if truly, you know, and I've talked about this on the show before, other stocks that have done well in times of recession. And the idea here to me is like, if you can pick out a few like 5 stocks that will actually appreciate, go up in times of recession, you buy those stocks, we get a recession, the rest of the market crashes, those stocks hold up, you're beating the market, A. B, if the market turns around, chances are these stocks aren't just going to go down because there isn't a recession. Maybe like your Dollar Trees will, because if you look at Dollar Tree on a daily basis, you can see here clearly as like the overall market was going down during this time, Dollar Tree stock is going up. And I think it's like investors, Wall Street saying basically, oh, as economic conditions worsen, or as we expect economic conditions to worsen, more people will have to shop at Dollar Tree. So maybe Dollar Tree just trades like inversely compared to the rest of the market. I don't know. But I would still be shocked if like you bought this stock, the market turns around, like SPY and stuff starts moving up, and this thing goes down. Again, maybe that's the case. I don't think that will be the case with Netflix. Other companies that we talked about were cosmetic companies. Back in 2001, when there was a downturn in the economy then, I believe it was the founder or president at the time of Estee Lauder talked about the lipstick index being, you know, in recessionary times, women were actually buying more lipstick because it offered them a kind of nice little $5 treat where they weren't getting a lot of it outside of that. So it's like, you know, to me, the same thing with Netflix. It's like, all right, if you're trying to cut spending in other places, are you going to want to cut your subscription in Netflix, which may end up helping you spend less money in other areas? Just a theory. Just a theory. Ice cream cost after the date fails. Yeah, I don't think that's calculated. Just a crazy. I also didn't even believe in here. I'll pull up the. This was from Lending Tree. It like makes no sense to me. Like nearly 1 in 5 people saying they're going on. Are there really people out there who are not going to go on a date right now because the glass of wine at their like favorite restaurant is $9 instead of $7? Like, that makes no sense to me. And I mean, okay, I guess that's, you know, that's just one example of a glass of wine, so it's $2. Like, that doesn't make a big difference. You could say, oh, Aaron, but if the whole bill is 20% higher, still. So if your date would have been $100 and now it's $120, like, I guess maybe that $20 is enough to keep people out, but why not just go on the date, but to a 20% cheaper place? I don't think the person really cares. And if they do, if they are the type of person that says like, oh, we had a great date, the person was great, we went to this place, but they brought me to X restaurant and not, Y restaurant, this nicer one, probably not someone you really want to be like dating long term anyway. I don't know, Ryan. I disagree with that. I don't think with a lot of people. Yeah, dude. Speaking of like a way to cut money out of the budget. Anytime that's like I spend way too much money on golf. Freaking round is like $45, and then you buy like 2 beers. Next thing you know, you're looking at 60. You slice 3 balls in the woods. You got to go buy a new sleeve of Pro Vs. Now you're looking at 72, and it's not even like 10 a.m. Stock soaring for some reason. I mean, we'll go back to Netflix's stock real quick. So again, I don't know. I mean, I don't really know if there are any takeaways from like both the SoFi article or from this lending tree about people dating less because of inflation. It's funny because the flip side to it, right? The seeming solution to inflation is a Fed-driven recession. That's not going to be any better for Damon. You can go back and look at the birth rates in like 08 and Great Depression that declined in times of recession because they're the same reason. People are going out. Like if 1 in 5 people are going on less dates because of inflation, the number's probably going to be like 3 in 5 are going on less dates because of a recession. So for anyone seeing this as like problematic, my thing would be like, okay, well, the solution to this is going to be worse than isn't there a quote about that? When like the solution to the problem ends up being worse than the problem itself. Someone's got a quote about that. But let's go back to Benzinga Pro or Netflix on Benzinga Pro. Because, yeah, okay, we can talk about why the stock's soaring today. We can talk about why the stock's been soaring since it dropped back to 180. Something to keep in mind is Netflix, compared to its peers of, I don't even know what Netflix's market cap is right now. Netflix's market cap. Okay, so compared to its peers of $100 billion plus tech companies, Netflix has got beaten up the most, right? If you look at Netflix's chart compared to your Apples, your Microsofts, even your Teslas, none of them are down 70% like Netflix is. So when Netflix went from 700, basically in a straight line, all the way down to 180, down here, it wasn't just people trying to catch a falling knife on Netflix. You had true value investors coming in, looking at this stock saying, okay, this company brings in X amount of money from subscription revenue every single quarter. The stock is down here at 180. This is worth it for me to buy. So it makes sense to me why Netflix has outperformed the market over the last few months. And I mean, from its bottoms, from those 180 levels, if you go back to June June 15th, stock was trading at 180 on the dot. Since then, we're up 25%. Nothing crazy, but the market certainly isn't up 25% since June. So it gets your ears perked as an investor, saying, okay, this stock is outperforming the market. Why? One of the reasons the stock could be performing really well today is, again, we're approaching earnings for Netflix. I mean, you have CPI tomorrow, which will drive the market and impact Netflix most likely, but earnings coming up on Tuesday. So you could have some people trying to buy ahead of earnings, expecting, maybe saying just expectations are so down. The report could come in better than expected. We do have other. Let's see if we have other company-specific news. I don't believe so. I believe the stock was down more than the overall market was the past couple days, so it's kind of like a reversal of trend there. But again, if I had to attribute today's price action movement to something in Netflix, and some days you can, some days you can't. You can make it as simple as saying because there are more people out there trying to buy than sell the stock. The demand for the stock is higher than the supply, so the stock's going up. I would say it has to do, with the fact that, it still has underperformed compared to the market. So if you expect some sort of reversion to the mean, it would have to outperform the market in order to do so, right? If the overall market's down, say tech, if we want to say tech's down 30%, but Netflix is down 80%, and you expect some reversion to the mean, which again doesn't have to happen for companies or stocks, right? A lot of times stocks go down 80% for good reason. Then the stock would have to outperform the market. And you also, again, have the aspect of earnings. Netflix has either the benefit or the curse of being one of the first big tech companies to report. Personally, I think Netflix, Roku, Meta, best. And again, exactly. That's why there doesn't have to be a reversion of the mean in these stocks. I do. I can't get lunch yet till we get to at least 100 likes. Got 175 people here. Shouldn't be too hard. Get us to 100 likes so I can go get some lunch. I just saw Raz walk around the office, so maybe we'll get some office lunch today. Alrighty, y'all. It is 12:59, which means it's almost Money Mitch time. We're going to go ahead and spin it over to my man, Money Mitch, and Stock Market Movers. Mitch has a great show planned for y'all today. If you guys, for whatever reason, have not checked out Mitch's Stock Market Movers show, best way to spend your afternoon on YouTube. He will be talking to Louis Navalier, the chairman and co-founder of Navalier Associates, as well as Jay Hatfield, portfolio manager at Infrastructure Capital Advisors. Jay Hatfield, always a great interview. So, Mitch, coming up now. Do not go anywhere. Thank you to JRP. Thank you to Quantum. Thank you to Crypto Taurus. Thank you to Andy O. Love you guys. You guys are the reason we do this. Till tomorrow, we'll be back. Smash the like. Give me a follow on Twitter at AaronBree5. I think they might be trying to tackle a bot situation. I don't. My follower count dropped by 10 yesterday. So I either had a really bad tweet that a bunch of people unfollowed me after, or they were cleaning up some bots. I don't know. Either way, till tomorrow. Peace, y'all. Thank you, Ryan. Where's my outro?